Welcome to our video on the breaking rule and its accompanying expert advisor. My name is Ernest Glocko and I'm the Chief Executive Officer of the company called Forex Academy. Forex Academy has been the leading provider of Forex training in the country South Africa, and we have developed an international reputation with our courses, and so that we at the moment are receiving students from all over the world attending our courses, all over Africa, even as far as Australia. People have attended our courses. We believe to create a reputation of honesty and integrity. Because of the fact that the Forex world is so full of scams, we believe we have to make a difference here. And so our mission is actually to create the highest percentage of profitable traders at the lowest cost to the trader. This video deals with one of our innovations. Maybe you should know already about the 3-month course, which was unique in the world. As a matter of fact, nowhere else in the world you could attend a 3-month Forex course, where half the course, or at least 6 weeks in the course, you do practical trading under the guidance and supervision of a professional Forex trader. That course has been extremely popular, and we're still offering that, but we also have other innovations like the breaking rule and its company expert advisor, which we deal with in this particular video. Let me explain to you the purpose of the breaking rule and why we created this. Through our trading experience, we discovered that one of the problems that we have is that we have so many false and fake breakouts from patterns or other areas like support and resistance levels, trend lines, etc., etc. And this causes unnecessary losses, and we decided that we should try and reduce these false breakouts to a minimum to increase our profitability. And that's where the breaking rule came into. If you look at this particular slide, you'll see that there is a channel and a breakout to the top in a bullish direction, which was then a false breakout, and the price moved in the opposite direction. So normally worldwide, people see a breakout of a level of line, when the candlestick in this case, or the bar, closes above or below the line, and then it's called a breakout, and normally one will open the trade on the opening of the next bar. Now this is something that we've changed now, and I will show you that this can't work, because all these 4 instances here show you where the price did close below the particular level, but caused a false breakout and went in the opposite direction. For instance, in this case here, we have a ascending triangle and a bars closing below the bottom line, which could mean a breakout in a bearish direction, but the price returned and went up in a bullish direction. Here there is a resistance level up here, and you can see here that there was also a candle closing above the line, and that was a false breakout, and the price went backwards into a bearish direction. Here is a descending triangle, false breakout at the bottom here, as you can see there for yourself, a bar closed below the line, but then the price going in the other direction. And once again, a trend line break here, bar closed below the trend line, but then goes back in a bullish direction. So you can see that it's something that happens very often and can cause a lot of false or losing trades because of these false breakouts. So that is why we created the breaking rule, and here we're going to have a quick look at it and see how it works. When the price nears a certain level, and in this case we say this will be a resistance level on the left hand side here. Normally, of course, when there's just a spike like this through the level and the price closes below that level, like in this B candlestick here, that obviously is not a break of that level. But in general, where the price closes above that level here, that is considered in the normal Forex world as a break of this level. Now we have changed that. We have said that is not enough, because the price can just go backwards again and go in the opposite direction, and that could be a false breakout. And we want something more, before we confirm this as a genuine breakout. So what we want to see is that the bar must close above the level or the line with a number of what we call buffer pips, a minimum number of pips. And that changes from one currency pair to the other depending on the average daily range. That means the volatility of that particular currency pair. But normally the minimum is 5 pips or 50 points that we need the price to close above the line. The reason mainly for that is because people don't draw these lines always at the same place. The line may be higher or lower in some instances, and we need to have an area that we can use as a area where mistakes can not, change the rule in such a way that we have a false breakout. So that's why we have a buffer to allow room for error in the drawing of this line or the level. In this case, the high was over here, over there, and then the price closed above the line. What we want to see in the breaking rule is that the next order in the very near future, in the next few bars, that there is enough power in the strength of the price to go above this high of this previous candle, this close, we call this a closed candle, with the same number of buffer pips above that, and only then will we enter, the trade. Now this bar here, what we call the breaking bar up there, doesn't have to close, but must just go past with the same number of pips. Let's say this is 5 pips, also 5 pips above this line. That shows us that there's enough power in the price to move above the previous high in that direction, and then we can only open our trade. And then of course the opposite in the bearish direction is also true. The bar must close below the level, in this case the support level, with the minimum number of buffer pips, and then it must continue below the low of that close bar. This is the close bar, okay, and must go with another 5 pips in this case if it's a ADR of less than 100, before you can open a trade. This will become clearer with you as we carry on. So the conditions are for the buffers are more or less stipulated over here, where we say if the ADR, that means the average daily range of the pair, is less than 100, we need that buffer size to be 50 points or 5 pips. If it's between 100 and 200, it must be 100 points or 10 pips. If it's above 200, it must be 150 points or 15 pips. Other ADRs lower or higher than this we'll deal with later when we look at the expert advisor. But then that's for the H1 time frame. If we deal on the H4, we have to double that, and if we deal with the daily one time frame, that's going to be 4 times this values. And of course, if you go to the 50-minute time frame, we will use half these values. That is in short the breaking rule. Now this is the way it's applied in practice. Here we have our support level, and the price breaks through that level, and this bar here is the close bar because it closes enough pips that satisfy the buffer pip size below this line, and then the next bar here, that's called the breaking bar, continues below the low of that particular bar there with enough pips to open it. Then the trade is open only there. Stop loss there, take profit here. Here's another example. In this case, there is a channel here, and only here where this is a closed bar, and the trade's only open over here, when the breaking bar goes below the low of the closed bar. Here we have a situation where there was a false breakout, which we didn't fall for because of the breaking rule, and once again here was a close below the channel, so 2 false breakouts. But then the price moved upwards, and then we had a true entry here when the breaking rule was fulfilled, and you can see that the price then continues upwards, in our direction and in a profit situation. Okay, so that is the way we use the breaking rule. Now, Something that's very, very important and brought a lot of extra benefits to this rule is the fact is that we wrote an expert advisor to implement this rule for you automatically. And we will tell you more or less how that works and what this expert advisor brings to you, brings to the table. It has many advantages. The first one here is that it saves you a lot of screen time. Once you have identified a trade, it could be many, many hours before all the rules are fulfilled and that trade is ready to be opened. That means the trader has to sit and watch the price movement or come back to the chart every now and then for a long time, sometimes 10, 12 more hours before the actual price is ready for breaking the channel or perhaps fulfilling your trading rules, and then you can open a trade. That means you have to spend a lot of time watching all these possible trades that may come up. And when you use the expert advisor, you will find that we will just draw a line, like if that's a trade there, and we will watch this line, and if the trade breaks up to the top, we will open the trade for you automatically, holding on to the breaking rule. So we will save you up to 80% or more screen time that you don't have to watch the screen. Once you have identified a possible trade, it can take many hours before you can actually open a trade. With the expert advisor, you just identify a level and the EA will open the trade when the time is right. Secondly, it opens trades correctly. Traders sometimes emotionally open a trade or open a trade before all the rules are in place and do incorrect trades. When you use an unemotional program like an expert advisor, it cannot make emotional mistakes. It avoids all the rules are applied and in place, and only then trade. So no more incorrect trades if you use this particular expert advisor. Then the other problem that we have as traders is that we are watching a possible trade developing, but then we have to either go to work or go to a meeting or a telephone rings, or we even have to just go make coffee in the kitchen, and by the time it comes back we have missed the opportunity and the trade has moved on and it's already moved on, say 10-20 pips further on, and we feel it's a bit late now to enter. When you use the expert advisor, of course, you only need to have your computer running and online to the broker on the internet, and then we will monitor the price for you, and at the right moment the expert advisor will then open the trade for you automatically here, and you will also then, they will also set the stop loss and take profit for you automatically. That will also calculate your lot size. You can tell the expert advisor what lot size you want to trade with on your own calculation, but you can also ask the expert advisor to calculate the lot size for you according to your money management rules. For instance, let's say you're trading at a 1 or 2% risk on your equity or your balance. Well, we prefer equity. Then the expert advisor will calculate your lot size and implement that automatically for you. Next, the expert advisor will also make sure that you have no risk by placing a stop loss immediately for and also take profit. This can be done in different ways. There's two options. Either you determine yourself what your stop loss and take profit position is, or we will calculate it in the expert advisor for you. And this could be done in different ways by looking at the previous swing highs, swing lows, looking at other ways to find the correct place for your stop loss or your take profit area. And here in the take profit area we can use risk reward. So you can set a risk reward of say 1 to 2. So your take profit is going to be twice the size of your stop loss, and we will discover where your stop loss is and calculate the take profit as twice the size or whatever your risk reward is you want to trade at, and put your take profit target in that position automatically for you. Then you can also activate the train stop if you want to immediately, and this train stop has got many different parameters. For instance, you could decide when it must be opened. It doesn't have to be at the full profit situation before it's opened. You can open it earlier, but then also set the distance to the train stop as the one that will, the one you select, of course. So we can set the train stop immediately for you. Then also there's an option that if the price reaches a number of pips in profit, or if it's a certain percentage of the take profit, like say 70 or 80% of take profit, the EA can move your stop loss to break even automatically. You don't have to be there, that's done automatically. So in that case, you are safe and you can't lose any money on that trade anymore. Next, there is a setting, an option in Expert Advisor that will close your trade when there's an indication, that the direction of the trend is changing. So we will watch the indicators that will tell us when the direction of the price movement is changing, and then we will close your trade automatically for you. So you don't have to be there. You don't even have to set a stop loss or take profit target, because in that case, whenever there is a change of direction, we will close that trade for you. Next, we can use straddling. Straddling means you can put the Expert Advisor can trade two different directions. You can either open a buy when it breaks out to the top, or it can open a sell when it breaks out at the bottom for you. So because sometimes you don't know, which side, often it's not clear on which side of the pattern the breakout can be expected. But then you can set the EA to monitor both sides for you, and it will open it on the side where the breakout is. If you want us to do that, we have certain indicators that we will say, shows that there is a trend or not, and we will check if that indicator shows a trend or not before it opens the trade. So we make sure that all rules are in place. And lastly here, if there's a strong move, and that means the price movement is strong and moves very fast, we will not wait for the break rule to be filled. We will open the trade at a certain point where we believe it's now safe to open that trade. So there are many advantages of using an Expert Advisor, and I will just want to go now into a video to show you how the Expert Advisor opens the trades.